Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are working on the assigned homework problems from the digital study guide for Chapter 10, the Group B exercises. And note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. If you still don't understand the concepts, then either email or telephone an instructor to get help with that understanding. And this will be the last exercise from the Group B. So this should be a relatively quick video. And then we'll move on to the problems in the next set of videos. All right, so assume that Hansen Industrial has the following data, right? So they have net income, preferred dividends, stockholders' equity on 2014, 2013, and common stock equity for 2013, 2014. And it says here, calculate the return on equity for 2014. Then comment on the performance during 2014. Right, so our return on equity is our net income over our average stockholders' equity. Okay, so whenever you have a return on something, right? Generally, you're talking about what you're getting back for your investment. All right. So our return on equity is basically our net income, okay, because that's what we're creating from that equity. And when we look at equity, you can say stockholders' equity, but you can't just look at stockholders' equity. It has to be the average, which we know that the average is the beginning plus the ending divided by 2. That gives us an average. And the reason why we do that is because if the beginning and the ending are different, all right, you can't just take the ending, because that's skewing things. If they're the same, then yeah, it doesn't matter which one. The average is going to still be either the beginning or the ending because they are the same. But whenever your beginning and endings are different, you have to average them out in order to have a usable number. You can't just take one or the other and use that. Okay, so now all it is just a matter of finding the numbers and plugging it in. All right, plugging them in. So we know our net income is $251,875, and for our average stockholders' equity, we have $1,750,000 plus the so that's the ending. Actually, I should go backwards the other way. Beginning was $1,005,000 plus the ending of $1,750,000, and you divide that by 2, right? So we don't need the common stock beginning and ending, okay, and we don't need the preferred for the simple reason that's all part of our total stockholders' equity, right? So that information there has nothing to do with the problem, right? So now when we do the math here, okay, in the denominator, when we add the $1,005,000 and the $1,750,000 and divide by 2, you end up with $1,625,000, right? So if equals 251,875 divided by 1,625,000, and that gives me 15.50% rounded. Okay, so that is my return on equity, right? And it's just that simple. Okay, now number 2 says comment on Hansen's performance during 2014. Having a positive return on investment, is a good thing. Okay, I mean, because you put money in and you got a return on your investment. If this happened to be a negative number, then you're actually losing money. All right, but whether this 15.5% is good or not, that all depends, and that's not explained in the solution. All right, again, when you're looking at returns on things, you need to compare to something else. So you need to compare the return on equity to previous periods. I mean, if in the previous period you were getting 25% and now you're only getting 15.5%, sure, you're positive, but you're not doing as well as you did the last period. So what does this, just by seeing 15.5% by itself, what does that mean? Yeah, it means I got money back from my investment, and that's fine. All right, but from an investor perspective, what if I'm able to get 30% return on my money? Would I want to invest in a company that's only getting 15.5%? No, because I can find a better investment and get more at 30%. Now, they're using 15%, but let me give a different idea here. Let's say, and because it is hard to find another company that's getting a 30% return on investment. I mean, they are out there, okay? But let's use this a little bit easier number. Let's say my return on equity was only 3%, which is a little bit more right now, and seems to be, and the economy seems to be a little bit more reasonable. Well, 3% is, yes, I'm still, I'm getting a return, all right? Meaning, I put my money in and I'm not just getting it back, I'm getting something more. But what if I have what if the previous month the return on equity was 5%? Well, I'm not doing as well if I'm only getting 3% this time, right? If the previous accounting period was 1%, well then yeah, now I'm doing a little bit better, okay? But 3% isn't much. If I go and I say, okay, let me look at a bank account, right, and I put it in the bank and I'm only getting 2%, then yeah, I'd want to invest in the 3%, okay? But there are other companies and there are other investments out there where you easily can get 8%, 10%, okay? Would I want to invest in this business only getting 3%? No. So even though because I can get the 8%, I can get the 10%, I can get even more than that if you know how, right? So even though the solution says it indicates that the Hansen Industrial performed well in 2014, yeah, it did perform well, but whether that's a good investment is a whole other story, okay? So you can't just look at return on equity in a vacuum as a single digit, okay? You can make an implication as to whether you got money back for your return or you're losing money for your return, but beyond that, you can't make any other implications. All right, so that's it. We're done with the exercises, and as always, if you don't understand something, feel free to contact an instructor, and I will see you in the next series of videos for the problems.